Mela, we'll be doing IEB accounting exam from the 2022 November exam, and we'll start with question 1, which only deals with inventory. Now, it's all about asset management, but and it's obviously out of 52 marks for 30 minutes. And now we're given information relating to Kench range. Sharon Kench owns Kench Ranch. They are a small retail business that imports. I will actually highlight that because that is very, very important. This simply means we are buying stock from overseas, all right, and sells sets of spanners for the commercial and industrial market. The latest financial year end on 31st of August 2022. They use periodic inventory system for all stock. Now, when they tell you that, they simply tell you that to calculate cost of sales, you're going to take the value of your opening stock plus the value of your purchases minus the returns minus the value of your closing stock to get cost of sales. That's all periodic inventory system tells you about. Now, they value their stock using weighted average method. And this simply means you have to use the formula, and I'll show you the formula later on. Now, Kenji range is granted 30 days by suppliers to return stock that they are not satisfied with. So if we buy stock now, what month is this? It's June. We will be given 30 days. So we need to return it in July. So I know that if I return stock in July, then I had purchased it in June. If I return stock in June, then I purchased it in May. If I return stock in May, then I purchased it in April. If I return stock in April, then I purchased it in March. If I return stock in Jan, then it means that stock was purchased in December because we're always given 30 days to return our stock. That's what that information tells you. Now, they do not deal in individual components. So we sell everything as a set. Okay, the spinners are purchased and sold as a set. They do not deal in individual components. Let us look at what they're talking about. So you'll realize that on the 1st of September, we had number of sets were 800 and cost per set was 1,500. So take that 1,500, multiply it with 800, and tell me what you get. It should give you that 1,200. Let's just confirm that it's true. And that's how we calculate the cost price at the beginning of the, so those are that is your opening stock. And remember here, we're using weighted average method, all right? And you know that weighted average method, you just have to wait to find the weighted cost price before you can determine the value of your closing stock. So if I take 800 and I multiply that by 1,500, it will give me 1.2, all right? And they said these are the purchases during the year. And the first purchase was done in November 2021. We purchased 1,000 units and the cost price there was 1,100 per set. So 1,000 times 1,100, that will give you 1,100,000. February we had 600 sets. We purchased them for 1,800. 600 times 1,800 will give us that 1,080. And the last purchase was in June. It was 500 sets and each set was 1,900. So for all 500 sets, we paid 950. Now, let's look at the information that was given to us, which is extracted from the stock records. In A, the total carriage on purchases for the year amounted to 17,700. Please note that carriage on purchases should be included in the cost price of stock. Okay, that's why I'm going to highlight that. Okay, this is for the entire year. And then they said orders over 1 million were delivered for free. So let's see which orders they're talking about. That November order was delivered for free. So there was no delivery fee or carriage on purchases on that. There was no delivery of purchase, carriage on purchases on that. When it comes to the 950, there was delivery fee or carriage on purchase. So it means the 17,700 relates to the June purchases. All right. Then they said carriage is not refundable on any returns to the supplier. That simply means that when you calculate the cost price of goods that you return to the supplier, you will not include carriage, the cost price of your carriage in this case. Now, 40 sets were returned. Let's check. 40 sets were returned in March. You see, that information we read earlier comes back. Okay, let me see if I highlighted that information, which said that we can only return stock after 30 days. Okay, now it's taking me to a different question. Let's go back to that. Let's see, where is it? Where is it? There it is. It says change range is granted 30 days by supplier to return stock that they are not satisfied with. So the fact that these spanners were returned in March, when were they purchased? After reading that information. They were purchased in Feb. So those 40 units will come from the 600 over there. That is why I'm going to cancel that 600 units that we purchased there. It means out of that 600 units, 40 of those units were returned. So we are only left with 560 of those units. All right. And then they told us that here, Change Range sold 1,645 units during the year. We'll come back to that. Now, try out this question quickly. Let me just give you how many minutes. Here we need to calculate the number of sets on hand using the information that was given to us. Okay, let me see. I will give you, can I say, in 5 minutes? Okay, let me just check. And I will give you 5 minutes. All right, let's see what you did. They asked you to calculate the number of sets on hand. I just need you to take note of the following, that at the beginning of this period, we had 800 sets. Then we purchased 1,000 and 2,100 minus 40, which is the return. And then we sold 1,645. So how do we go about this? I'm going to take it straight to the basics. Please go back to the first video that I published on inventory, which is first in, first out, and weighted average, where I explained everything. You will start first by the opening sets, which is 800 sets. And then you will have net purchases, which is your total purchases minus returns, and that will give you 2060. Then you'll have units available for sale. It will be opening plus your net purchases. Out of these units that are available for sale, you actually sold 1,645, reducing the units that were available for sale, meaning that you are left with the value of your closing stock, which will be 1,215. Now, use this information to calculate the weighted average cost of one set of spanner. All right, give yourself, again, I think 5 minutes was too long. For this one, I will simply give you around 3 minutes. Okay, let's do it. And then, this one, I'm going to give you 3 minutes. All right, try it out. All right, let's see. So you were required to calculate the weighted average cost. I will start with the formula for calculating weighted average cost per unit. And that'll be the value of your opening stock plus purchases, the value of your purchases minus the value of your returns, plus coverage on purchases, and then you subtract, obviously you subtracted your returns. In the denominator, you'll have the number of units of opening stock plus the number of units of purchases minus the number of units that were returned. Now, the value of your opening stock was 1.2, you saw that. And your net purchases amounted to this much. It amounted to like 3,130,000. And that's what I'm going to write as my purchases and then subtract my returns. My returns, we returned 40 units, but those 40 units were actually purchased in Feb. Why were they purchased in Feb? It's because we returned them in March and we only have 30 days to return them. So that's why we say that they were purchased in February. So what we are going to do is to take 40 units, multiply by the price that we have in February, which was that 1,800 times 40. All right. And then you will simply add 17,700, which is your coverage on purchases. Divide this by 800 units plus 2,100 units minus 40. And this will give you the average cost per unit for one set. And that will be 1,498. Now, let's calculate the value of the closing stock. Closing stock, we calculated it in 1.1.1, and the number of units of closing stock amounted to 1,215. You will simply take that 1,215 and multiply it by what you got in 1.1.2, which is weighted average cost per set. So we were left with 1,215 units, which is number of sets. We multiply that by price per set of 1,495. That will give you the value of your closing stock will be 1,816,425. Okay. Now, the owner Shannon has been advised that she should insure her stock for the highest possible value. Calculate the rent value of the closing stock if she was to use the first in, first out method, valuation method, that is. And for this one, I will give you the same number of minutes, which will be 3 minutes. Okay, try this out. Calculate the value of closing stock using first in, first out method. Okay, try it out. All right, let's see what you did. I'll take this from 1.1 just for us to see how many units are we left with. We left with 1,215 units. Okay, and what will make up that 1,215 units? The first amount that will make up that 1,250 units is the last purchase. Remember, the last purchase will be part of your closing stock. The last purchase will be part of your closing stock. So we'll start with the last purchase. And the last purchase will be 500 units. I will highlight these ones in um, light green. Let me just highlight it in light green. Okay. So this will be part of our closing stock. This will be part of our closing stock here. This will be part of our closing stock. There's a high chance it will be part of our closing stock. That will be part of our closing stock. If we stay not enough, then we'll get something there. Okay, because it makes up 1,215. Okay. I don't even consider the 600 because of that 640 was returned. So basically, we know that it is 500 units, and these 500 units were purchased at 1,900 plus the carriage because that order was less than a million. Okay, so we're gonna take 515 times 1,900 plus the 17,700. That will be the cost of these 500 units, because when you calculate the cost price of stock, you include all costs incurred to bring the assets for it to be ready for use or for it to be ready to be sold. Okay, so we incurred 17,700 to bring these spares to our premises. And that's why we're going to include them in the cost price. So those 500 units will be part of your closing stock. So to calculate the cost price of 500 units, I will start first by indicating how many units were part of our closing stock, which were 1,250 units. All right, 1,215 units. Of these units, 500 of those come from your June purchases. So that will give us 967,700. And of that 500, 560 will come from the February purchases. That will be 560 times 1,800, which will give us 1,008,000. From November, let me see, let me just do a quick calculation, because remember, the number of units of closing stock must be 1,215. So let's check how many units we have calculated the value of so far. So it is 500 plus 560. That will give us 1,060. So in total, it must be 1,215. We're going to minus 1,016. So how many units will come from the November purchases? Is 155 units. So 155 units will come from the November purchases. Remember, November purchases amounted to 1,000 sets, if I'm not mistaken. But of those 1,000 sets, we only need 155, meaning that the rest was sold. So of that 1,000, only 155 made it to be part of the value of your closing stock. Okay. So what I'm going to do is to take 155 and the cost price. Let me just check the cost price in November. How much was it? It was 1,100. So you will take 155 times 1,100. That will give you 170,000. Then you add the cost of everything. That will give you the value of your closing stock. So you will take 967,700, add it with 1,008,000, add it with 170,500. That will give you 2,146,200. And I just need to specify why we didn't add carriage on purchases to the stock that was left from June, actually from Feb and November. That is because that those units did not have carriage because we purchased more than a million, right? Okay. I hope that makes sense. Now, Here they say Shannon has noticed that the price of spanners has increased significantly during the year, referring to November and June purchase price. Determine the percentage increase and provide a realistic explanation of the significant increase. When you calculate the percentage increase, you will check your November purchases. How much were your November purchases, and what was the cost? From your November purchases, the cost price was 1,100, and from June it was 1,900. You're gonna take 1,900 minus 1,100, and then you divide by where we moved from. We moved from 1,100. So if we moved from 1,900, we're going to divide by 1,900. But in this case, we moved from 1,100 to 1,900. You divide by from, not to. Okay, so that's why you are going to take the difference between the two and divide it by 1,100 and times that by 100. And that will give you a percentage increase, which is 72.73%. Now, I was doing this in my support lessons today, and they said give a realistic reasons as to why this is the case. And the student that I was with, which is Garabo in this case, didn't pick this up, right? And she picked it up later on that we are buying from overseas. Now, the problem with buying from overseas is the fact that transportation will be expensive, you need fuel, more than anything, the fluctuation of the currency, because when you buy from overseas, you have to use that country's currency that you're buying from. And at the moment, South Africa is going through a difficult time. Our currency is weakening against the foreign currencies. So that's why that will cause the price to be higher. If our currency weakens, then what we buy will be more expensive because we will need more rands just to buy 1 unit of the foreign currency. Right? And it might be due to increase in transportation costs and fuel, which has been the case due to the war between Russia and Ukraine, oil prices skyrocketing, therefore petrol prices going up. I think they eased up this month, okay, and the rand is getting better, but yeah. Now note that whoever we buy spanners from might not produce a lot of those spanners, and if there's more demand for those spanners, the manufacturer will increase the price of those spanners, okay, making it more expensive. And you will realize that we went through COVID-19 restrictions and we made a lot of losses, so we want to catch up, we want to recoup whatever we lost, and we will increase current prices to recoup what we lost previously. Okay, that's why it might be the cost might have increased by so much. All right, it's because probably the supplier went through difficult time during those COVID restrictions, and now they want to recoup the losses they made by actually by increasing the cost at the moment. And please note that our inflation in South Africa is sitting at around 6.18%, if I'm not mistaken, and that's 72. It's way above inflation, so we can't say it's because of inflation. It might be due to the other 5 reasons, but the last one, inflation, no, it's not. Okay, now this one here says determine what the selling price of one set of spanners will need to be if the business was to make a gross profit of 1,057,500 after marking their stock up by 40% on the cost price. First of all, I'm going to take the gross profit and find my sales value because I need sales. So if I get my sales value, you multiply by what you want, you divide by what you have. We have gross profit, which is 40%, we want 140%, which is our sales, because we added the markup to it. That will give us 3,701,250. So all I did is just after finding sales, I know that for me to find sales, I normally take number of units sold multiplied by the selling price. But I don't know I don't know the selling price. I have the number of units though. So I'm going to use this in reverse. So number of units sold multiplied by the selling price will give me that sales value. Okay. So if I want the selling price, I'll take the selling price, the sales amount, and divide it by the number of units sold, which is what I've got. Okay, I've got sales, which is 3,701,250. I've got the number of units sold, which I highlighted in the first page. How many units did we sell? We sold 645 units. So I will take that sales value and divide it by the number of units that I sold, which is 1,645 units, and that will give me price per spanner. This is what I can charge my customers. I can simply charge my customers 2,250. Easy, eh? Easy. And this is last year's paper, and you easily get those marks. Now try this one out, okay? And you need to actually complete this table. You need to understand what vet input is and vet output is. I know probably my grade 12 forgot about this because I explained it in grade 10. I will need to go back to this, but I will explain this when I do the next video on inventory, all right? And try this question as well, which is a question on fixed assets, 18 marks for 10 minutes. Yeah, so the questions to this will be this, okay, and this here. Try them out, try them out, try them out, and please don't forget to subscribe. And later we will do financial statements. So get your IEB 2022 November paper and start getting busy with it. And then check out my channel for corrections to that. All right. Thank you for watching. Hozo. Or what does Hozo mean? It means may peace be with you. All right. Enjoy. Cheers. Bye.